Hello, everyone, and welcome to our Malpractice Insurance Basics webinar series. This is episode 4, where we will be discussing common supplementary payments found within an LPL policy and help you understand what they mean and how to determine if they are valuable for your firm. I found with my clients that this is an area that is often overlooked because LPL policies often contain a lot of extra payments that my clients may not take advantage of because they don't know about them. It's also important to understand these when you are considering which policy is best for your firm at renewal. So I'm hoping that after this, you'll have a real good understanding of what they mean, and then you can evaluate and overlay it over your firm's needs to determine which ones are desirable for your firm and which ones are not that important. Just a note, if you have questions, hold those to the end. I'll go for about 20 minutes. These are pretty short, and then we'll leave about 10 minutes to answer any questions that you may have. Okay, so with that, we'll get started. So a little overview about supplementary payments. These are included in the LPL policy or via endorsement. So that means you'll either have a section within the policy form that is named supplementary payments or additional benefits, something like that, and it will be enumerated there. And if you don't have it there, you can look to your endorsements and you can see a summary of those on your declarations page, and that will be enumerated there. So you'll see an endorsement for grievance defense or some other type of coverage that we'll talk about in a moment. Something else is that they have separate sublimits and do not impact the policy limits. So supplementary means separate money set aside to cover a few circumstances or events that might occur for a firm that are outside of a traditional malpractice insurance claim. Generally, they do not have deductibles. So comment here about that. Supplementary payments are found in admitted products. Non-admitted products, non-admitted policies will have some, but not as many. So you'll definitely within an admitted product, there's no deductible for these. In a non-admitted, you might find a low deductible, but generally speaking, they don't have deductibles. Also, they vary greatly between policies. So in our discussion today, I'm giving you some general descriptions and amounts that are found in a policy, but it's real important that you look at your policy to see specifically what it allows under supplementary payments and how they are described, because one type of payment or one type of coverage can vary greatly between policies. Finally, you can usually add these or change them via endorsement. So if there's something that you see here that you are now aware of that maybe you weren't before, you can have that added to your policy if you don't already have it via endorsement. So just keep that in mind. It's kind of these extras that they come with the policy, but you can always ask for more. Okay, so the common supplementary payments that we are going to look at today there's 9. The first is disciplinary or grievance defense, loss of earnings reimbursement, crisis event coverage, cybersecurity incident response, employment practices liability coverage, Rule 11 coverage, punitive and exemplary damages, subpoena assistance coverage, pre-claim assistance, and finally, nonprofit directors and officers coverage. Okay, disciplinary defense and grievance defense. So this is a real common one that you'll find in most policies, most LPL policies. This is reimbursement for attorney's fees and expenses incurred during a disciplinary proceeding. And commonly, you'll find $10,000 per proceeding per event and up to $20,000 per policy period. And what's important to note here is that a disciplinary defense is different than a claim in that it is alleging a violation of the model rules of professional conduct. And the model rules of professional conduct are set forth by the ABA and then adopted by state bars. And those are a set of rules, and they are regarding the ethical and professional responsibilities of bar members. So this type of event is not malpractice necessarily, but it's violating some aspect of the rules that define the ethics and conduct of which an attorney should operate. So just kind of a little difference there. And commonly 10,000, and usually these are not a source of monetary payment. The typical disciplinary action is a warning, an admonition, or a censure. And that's done by the committee that governs it for the bar. So typically when there's a disciplinary or grievance, any person who observes an attorney operating in violation of these model rules of professional conduct can report them to the state bar. And it's a matter of writing a letter, and then the state bar reviews the information, decides whether or not they believe a rule has been broken. If they do, they'll contact the lawyer and ask for their response. If they don't, they'll simply respond to whomever reported this, that it's not within their purview and it's not a violation. But if it does go beyond that, it's basically a decision by the committee. And as I said, it's usually a warning or an admonition or a censure. A censure is public and the other two are private. It's rarely a matter of money being, fined or penalty to the attorney. So that's why you won't find a high limit in the supplementary payment, because 10,000 is typically more than enough to satisfy whatever needs an attorney might have under this situation. Okay, let's go to the next one. Okay, loss of earnings reimbursement. Again, very commonly found in most policies. And this is a real important one because it is payment for loss of earnings while in attendance at a trial, hearing, arbitration, proceeding, or mediation for a covered claim against the insured. So it's for, it's the way to replace money to an attorney who is taken away from working on files and billing hours in defense of a claim. And it's usually about 500 per day and 15,000 per claim and up to 50,000 per policy period. So it's pretty generous. It's clearly not going to be everything an attorney would earn in a day necessarily, but it's nice to have this in place in case you do have to move to defend a claim. And this is something that you can look at and decide if it's not enough money, you can have this changed via endorsement. So very important to pay attention to as you're comparing policies. If this is something that's important to your firm, you want to make sure that it's in the policy that you're buying and that it is at a level that would satisfy the needs of your firm in the event of a claim. Okay, crisis event coverage. This is found in some, not all. This is a less common coverage, but very important. Crisis event coverage is public relations expenses. This is what it covers: public relations expenses incurred by the named insured arising from or in connection with a public relations event. Commonly about 25,000 per policy period. And so what is a public relations event? Most of the time when I talk with people about this, they don't know. Grievance defense is pretty obvious, earnings reimbursement, pretty obvious, but crisis event coverage, what is it? Okay, here's what it is. It's an event that has a material adverse effect upon the named insured's business reputation. And below, I've put a couple examples of what might cause that adverse effect on a reputation. One would be the sudden and unexpected death or permanent disability of maybe a key attorney, an indictment or charge of a felony criminal offense against an attorney, an accident or incident of violence at the offices, a separation of a large law firm, or a cyber attack. So basically, crisis event coverage is going to cover any event that creates a loss of faith in the firm by the clients. So it's a way to maybe spend that money on hiring a public relations firm to put together a message to the public, to the clients that you think might be adversely affected by whatever event happens, to retain them and to restore the firm's reputation, maintain the firm's reputation, or prevent any loss of faith and clients from the firm. So crisis event coverage, especially in today's day and age with, I mean, really cyber attacks happening so much, or just when a large firm separates, those are the real common ones. That can cause kind of a panic among clients and in the community. And this is a great supplementary payment to allow the firm to purchase, to pay for public relations firm to get the message out and hopefully prevent any adverse effects against the firm. Cybersecurity incident response. Okay, it's reimbursement for security incident response, and it's limited to costs related to complying with state or local laws that require the firm to provide notification and credit monitoring to those affected by the breach. This I want to comment on. This is not to be considered a replacement for a standalone cyber policy. This is simply some money set aside. As you can see, it's pretty narrow. This is an example of common policy language, but it's limited to cost in complying with state or local laws. It's not going to help with replacing funds that are stolen. It's not going to help with ransomware, but it is nice to have a little extra money in the policy to assist the firm if this happens. The common amount is about $10,000 and per event and $20,000 total. And what I tell my clients to think about this, the value in this is you can use that $10,000 that your LPL policy provides to satisfy the deductible requirement on your standalone policy. So if, for example, you look at your LPL policy and it has $10,000 for you in the event of a cybersecurity response, you might want to purchase a standalone cyber policy with a $10,000 deductible. And the net effect would be that you'd have a cyber policy with a zero deductible. So it can be really valuable when used for that, but really not enough to cover a true cyber breach. And something else is what is covered really varies greatly. So in this example, it's limited to basically the firm's costs related to complying with the laws required in the event of a breach. So it's credit monitoring, setting up an 800 number, providing notice to everyone who might have been affected by the breach. So, again, this wouldn't be enough, but it's very nice. And you want to think about it, just what it's meant for, supplementary payment, not, oh, my LPL policy also gives me a cyber policy. Okay, the next one. Employment practices. Liability, very similar to cyber in what I said a moment ago, which is don't think of this as replacing a good employment practices liability policy. You definitely need that in place, but think about it again as a way to assist in paying the deductible on your standalone policy. And what this will cover is reimbursement of defense costs incurred due to an EPL claim, harassment, wrongful termination, discrimination, etc. Notice that it doesn't say loss. So it's not going to pay damages. It's going to help with defense costs. But again, in the event of a real claim by an employee, that would be very, insufficient insurance to cover that. So again, think about it as a great supplementary payment, but not the totality of coverage that your firm might need. Okay, Rule 11 coverage, punitive and exemplary damages. This is a very uncommon supplementary payment, but it is found in a few policies out there. And what it covers is payment for sanctions and fines imposed for abusive process by attorneys to prevent frivolous or unfounded lawsuits. And if you're not familiar, Rule 11 is a federal rule that prevents abusive process that most states have adopted. So this is a punitive rule in that a court can determine that maybe an attorney has really pursued, has abused the process to pursue malicious prosecution or to what's called, motion somebody out of a claim that they can't afford to continue to sustain response to something because an attorney has abused the process so much that a fine might be assessed against them by the court. This is not common. Really, an attorney has to go pretty far to get a punitive fine from a court, but it does happen. And if it does, there's $10,000, and this one does pay the fine, not just any kind of expense related to or to defense of it. It's the fine. So that's kind of a nice one to have. if important to your firm, but it's not one that I've seen used very much, again, because it's unlikely that a court will find that the attorney's actions have risen to that level to require a punitive fine. But, you know, if it's important to you, it's definitely something to consider. Okay, subpoena assistance coverage. This one also is not as common as some of the first few ones that we spoke about, but it's in a few. And subpoena assistance coverage is payment provided for costs related to responding to a subpoena arising out of legal services rendered by the insured, including production of documents and preparation of sworn testimony, provided the subpoena arises out of a civil lawsuit to which the insured is not a party. So let's break that down a bit. What that's saying is it's money, commonly $25,000, for the insured to respond to a subpoena served to him for a claim in which he is not a party to the suit. So it's not the attorney being sued by somebody else. It's the attorney being served with a subpoena related to a matter that he handled or she handled for one of their clients. So again, it's not an action against the attorney. Keep in mind, this won't cover it under the supplementary payment, but of course, the bigger, broader policy form would certainly cover an attorney who is served with a subpoena for an action that's directly against them. So this is just supplementary money. So when I say something isn't covered here, remember, it might be covered under the broader policy form. So this one is so it's money for the attorney to respond. And the $25,000 is for them to retain an attorney if needed to give them advice, to prepare them for any testimony. If the attorney needs assistance in putting together documents that have been requested under the subpoena, that can be very time consuming. So that money could be spent to pay someone to go through files and locate and prepare those to satisfy the subpoena. So this is kind of a good one. And think about that, you know, for your firm. If you like that, you'd want to look at your policy and see if it has it. And again, if it doesn't, now that you know about it, you could ask for that to be added. Pre-claim assistance. Okay, this is payment for pre-claim assistance, pre-claim investigation and attorney's fees. It's commonly about $5,000. It's nice in that it's first of all demonstrating the carrier's interest in getting involved with your firm, the insured, before something becomes a claim. So this is a really great feature because you can ask the carrier for the money to investigate and take a look at maybe some events that have happened before determining whether or not you think it's a claim that should be reported to the carrier. And the $5,000 is not part of your deductible. It doesn't affect your limits. It's just straight up $5,000 for you to spend on investigating and determining before something is a claim whether or not should be reported. So that's a nice feature. And again, remember, if that amount is too low for you, you can always ask for it to be increased. So, okay, next one. A nonprofit directors and officers coverage. This is a good one. It's pretty common in most policies. And, you know, this is nice because a lot of attorneys in firms, they serve on nonprofit boards, and it's nice to have a little coverage built into the LPL policy for them to take advantage of in the event of some sort of a assertion, allegation, claim made because of their activity on the board. So it's payment for damages and claim expense arising out of an insured's activity while acting as a director or officer of a nonprofit organization. And it's commonly about $10,000 per policy period. So, you know, usually you're not going to find on nonprofits, you're not going to find a lot of potential liability. If they're serving on a for-profit board or maybe a separate company that they have ownership in, that would really be, not really enough money, and it wouldn't matter anyway because it would be a for-profit. But typically that separate entity would have purchased their own directors and officers coverage, and that would certainly take care of the attorney and everyone who's participating in that board. But this one's kind of a nice feature. Again, if you wish to increase it, you can ask for that. And something else to think about as we've gone through these is not only can you have things increase, but maybe you look at your policy and you say, I don't really care about some of these supplementary payments and I don't want to pay for them. So conversely to asking for them to be added, you can ask for them to be removed and see what that does for your premium, because that can, help bring your premium down a little bit if you've got some supplementary payments that you don't care about and you're willing to have those excluded from the coverage. You'd let the carrier know. They would they would exclude them via endorsement, and that can impact your premium. So it's really nice the way you can kind of plug and play with these. You can add the ones you want and not add the other ones. But okay, well, that's it for our nonprofit directors and officers coverage. And just a summary that, what I hope you got from that is an understanding of the most common ones. What I want you to do, what I want all of, my clients to do as well is when you're looking at policies, if it's a renewal, or if you're looking at other policies and you're thinking about moving to another one, take a look at what you have now. And if there's things you like about it in the supplementary payments, you really want to pay attention to those and make sure that what you get in the next policy is the same. Often, I think a lot of firms get lost in limits and deductible and maybe claims expense and how that's treated, or a first dollar deductible or per claim. But they will not take a close look at these other features that can play a very big part in your experience in the event of a claim. So that being said, that is the presentation. And now I am very happy to take questions you might have on anything I've talked about here. If you've seen another supplementary payment that I haven't covered, I know about that too, so you can ask about those as well.
Okay, so our first question is, how much does the average grievance cost?
That is a great question. And whoever asked that is a little psychic, because I actually did try to do some research on that. And I couldn't find a hard and fast number. I can say from my experience of 21 years in doing this, I would assume it's a very low number. It's not, I don't think it would be more than 10,000 from what I've seen. And I work in all 50 states, so I've seen a big footprint on that. And that's because, just going back to what we talked about there, usually the disciplinary action, the penalty is a warning or a written statement that what you did is wrong. The worst case scenario in that is if you are grieved or you have disciplinary action, is you're disbarred, right? That's the worst thing that can happen in violation of the model rules of professional conduct. And that's really bad. That's when, maybe an attorney has an alcohol or drug problem and it gets noticed by a judge. A disciplinary action can be brought by anyone. So who witnesses a violation of the rules. It's not limited to a client, where you might find more in a malpractice claim. So, in that case where something rises to the level of disbarment, it's still not a monetary loss. So dollars aren't really the drivers of grievances and disciplinary claims. So, I don't have a hard number on that, unfortunately, but I can tell you very confidently that it's a low number.
How often are the supplementary payments used by your clients?
The ones involving the earnings reimbursement, those are the most common. I have seen subpoena assistance. I have never seen a Rule 11, anyone take advantage of that. So I'd say, the common ones are the ones related to an actual claim, pre-claim assistance for sure, earnings reimbursement, and I've seen the subpoena assistance. So I'd say those are the most common.
Which carriers give the best supplementary payments?
That's a big question, whoever asked that, because there's, virtually hundreds of insurance carriers out there. As far as answering the best, that is very subjective, because I have found in my clients, and as I said, in 21 years and working with thousands of law firms, what is important to one firm may have no importance at all to another. So it's difficult to classify, who has the best. That really is a matter of, each firm looking at it and deciding, if you look at your practice and you say, we're not at all concerned, or, we're not at all concerned with D&O coverage. No one serves on a nonprofit. So that has no value to you whatsoever. Whereas a firm that has maybe a couple attorneys serving on other boards, they're going to feel differently. So, saying best is subjective. So I can't answer that, but I can say, again, they vary and they're different. So you look at policies and you find the policy that contains the supplements that you like, and that's best for your firm.
Do you have to file a potential claim to take advantage of pre-claim assistance?
Do you have to file a potential claim to take advantage of pre-claim assistance? I think you're asking whether you have to report it when you're just in that pre-claim stage, and the answer is no. So you could do pre-claim assistance and not report the claim to the carrier, and it wouldn't be counted as a claim. So pre-claim is truly pre-claim. And, it's a great question, whomever asked that, because I get that when people call and I'll say, hey, you've got pre-claim assistance under your policy. Why don't we get the carrier's defense or claims department involved and see what they say? They definitely tend to kind of bristle and shy away, because the thought is, I don't want to report this yet. And if I get my carrier involved, I have to report it, but that's not true. So you can safely take advantage of that pre-claim supplementary payment. And then after that process, you can determine if it's a claim or not that you believe you need to report.
Okay, and our final question, you mentioned you can change or add via endorsement. How do you do that?
Good question. I left that out. I didn't talk about that in my presentation. So how to add or remove is really if you are working with a broker, an agent at a brokerage. So I'm an agent and I'm a broker. Lawyer's Choice is a broker and I'm an agent. If you're working with someone like me, you call me up and you say, hey, I saw this great webinar and I learned I can add some things and I want to do that today. And you talk to me and then I say, okay, what do you want? And I go back to the carrier and I will ask them to endorse whatever it is you're looking for on, or to enhance it. And I can tell you, typically they will not do that mid policy, but they will do it at renewal. So timing is important in that. And you go to them and you see what they say. Some will, depending on the type of supplementary payment that you want to have endorsed on, they may charge a small additional premium for that endorsement, or they may not. So it depends on whether, they feel like, you're an important client to us. We want to add value. We want to keep you, or this is not endorsement or coverage we really like to add. So if you want us to do it, we'll do it, but we need to charge premium. So that's how they feel, and they'll tell you. And that's if you work with someone like me. If you're working directly with your carrier, some carriers do work directly with their insureds. You just give the carrier a call and again, tell them what you want, and they'll let you know if they can add it. And if so, if there's a cost associated with that or not.
That is all of our questions.
Okay, well, it looks like we're right about at 11:30. So thank you to everybody for attending. And I hope you got a lot out of this, and I hope it was quick and easy for you to digest. Of course, if you have any questions, you are welcome to contact me. I'm happy to speak with you in greater detail if there's something you'd like more information on. And then I also want to encourage you to join us for our next webinar, which I think will be for most people, because it's dealing with loss runs. And it's what are they? How do you read them? What impact do they have on your firm? I know that you get asked for those a lot, and I think it's very confusing for most people. So I'm excited to share that with you next month. So until then, thank you again, and I hope you all have a great day.